Hello, everyone, and welcome. For those of you that do not know me, my name is Sophia Hassan. I am the founder of this amazing group, this community, Woman Disrupted. And if you guys saw my live yesterday, it was yesterday. I told you that, I would be bringing on my amazing friend Martha today to talk to you guys on our law number 3 of our money mastery skills that we learned the past couple months. On how to save money, especially saving money on taxes. And I know this is not a very sexy subject, all right, but in order to become savvy, successful women that want to do more for their communities, they want to become more, they want to learn and educate themselves so they can educate their communities, their families, pass this information down to those that they love and care about. We have to learn these concepts ourselves first and invest in ourselves first. So, we talked about, assets versus liabilities. We talked about, credit and why that's important, and ways that you can build your wealth. But saving, your money and putting more money in your pocket than giving to the government is like key. It is key as well in order to get ahead. So, I met Martha, God, I love God, and God works in such mysterious ways. I met Martha actually last week at my very first in-person networking event since COVID started. So in over a year, and I just missed people, and I went to this event, and I met her, and I was just immediately drawn to her energy, and I told her about our group and what we're about, and she was just immediately in tune with me and what we're trying to do in this group and grow together as women. And so I really want you guys to give her a warm welcome in the group and hear her story, and also obviously we're going to be picking her brain as well when it comes to this subject. So it's a lot. And, obviously, guys, the deadline, if you didn't know, for taxes has been extended to May 17th, which is a couple weeks from today. But, if you already did your taxes, it's all good. If you, had questions about it, or if you weren't quite happy with the outcome, definitely reach out to Martha and pick her brain about it. Me and her were just chatting prior to this, how can people get a hold of her? And I'll share her business page I'll put a link to it so you guys can reach out to her directly. She does work with people in different states as well, so you can ask her questions, on your tax return, or if you haven't filed yet, great, ask her questions on how you can kind of change the outcome from last year's taxes and whatnot. So there's so much that she knows, and she has an incredible story herself. She is quite the woman disrupted herself. So I'm gonna be quiet and let her take over. So welcome, my beautiful friend.
Thank you so much, Sophia. I feel the same. It's just such a blessing. I almost didn't go to that event. I don't know. I guess it's hard to get back out there when you've been at home, all of this time, and to get kind of out around people again. And I got delayed with a client, so I knew I was going to be late, and I'm like, oh, I just won't go. And I just had this instinct, Holy Spirit going, no, you're going. So I'm like, okay, well, let me just delaying whatever. But anyway, I got there, and yeah, when you introduced yourself, I was just blown away again by your story and your energy, what you do, and I was just so drawn to you as well. So when she said, who can I introduce you to? And I'm like, her right there. I want to meet her. I think I can help her and her group with a bunch of great stuff. And so I'm really grateful for that. I'm grateful that we got to meet and that I'm here. And thank you for inviting me and having me. My pleasure to be here.
Absolutely.
And hopefully I can provide some value for you guys.
Yes, and that's the essence of the group, Martha, is value, education, but not just the education itself, because I always say this, that knowledge alone doesn't do anything. It's the application of that knowledge. You got to do something with this information, ladies. Not only do we bring you the information, I am giving you the source, and that is Martha. I'm giving you the person that you can actually connect with and ask questions. And that's what I love so much about this community is, everybody that I know in my circle is so generous with their time. And so I really appreciate, Martha, offering herself to our group to, ask her questions. And she's an accountant and she's a tax strategist. So, whoa, like this is way over my brain because everything that has to do with numbers, I'm like, whoosh, like
Most people shut down. Yes.
so, so someone like Martha that can explain things in plain English and simple terms, that's what we need because, guys, we got to learn the ways of the wealthy. Y'all know Amazon ain't paying no taxes. All these big companies ain't paying no tax. Okay, now there are tax laws out there that we need to use to our advantage. And so that's why pick the brain of the person who knows this inside and out. So, Martha, I really want, women to like hear your story, because you're a minority just like myself, a woman of color. You're just such a powerhouse, and to be an entrepreneur in and of itself is it's a rough road. But you really are such a respected authority in your field. So like, kind of take us down that journey.
Yeah. So there's that moment that defines us and transforms us and catapults us into action, right? That moment where your mindset shifts or something happens that is so monumental that it causes you to go in a whole new direction in life, right? Where you can literally pinpoint the before and after this moment.
Yep.
So that moment for me happened in the garage. I'm standing in the garage with my husband because, that's where you go to have private conversations and get away from the kids. Unfortunately, this wasn't going to be one of those fun private conversations. No, not by a long shot. As a matter of fact, I was standing there with my teeth chattering so loud you could hear them across the room. I was terrified. I was trying desperately not to cry and failing miserably. My husband is standing there annoyed and he shouts like, "Why am I out here? What do you want?" And I try to talk and I can't. I literally have to put my hand over my mouth to choke down the agony that I was feeling and nauseated, not by the smell of the oil or the gas in the garage, but by the intense fear that was ravaging my body. I had found out that morning. And how I got through the rest of my day, I do not know. All I can say is I just literally did not have the luxury of a breakdown right at that moment. And I just had to go through my day. All I knew to do was pray. So I prayed for strength. I prayed for wisdom. I prayed for revelation and discernment, everything that I could think of, and just went about my day, taking care of the kids and running the household and running the business. I even ironed his shirt and cooked him dinner because I guess that's what you do when you're in a complete state of shock or when you're delaying the inevitable and you really don't want to face what you're facing and hoping against all hope that you're wrong this time. So 12 hours later in the garage, I finally got up the courage to ask him the question that I already knew I had the answer to in my heart. And he confirmed out loud what I did not want to hear. Yes, he was having an affair. Yes, he was in love with her. And yes, he wanted a divorce. So 6 weeks after that conversation, I moved out with my not even 2-year-old baby that, by the way, we had just adopted as a newborn. Our middle son was a freshman in high school, and our oldest was a Marine in combat training, learning how to shoot a rifle in case they sent him to war. So I went from that reality to now being thrust into this new reality that I did not want, that I did not choose for myself. And it was hard enough being a self-employed person with a husband, but now with 2 kids to take care of on a 1-income household and being self-employed, that was just not at all what I had planned for. I mean, I had poured everything I had into that marriage, everything I had into running our businesses, and everything I had into making what I thought was us successful, only to realize that I had made him successful and I walked away with nothing. I literally moved out with only what I could fit into black garbage bags shoved in the back of my SUV. But I pressed on. I kept moving forward. And just when I was getting my footing and just when I was actually rebuilding something from nothing and I felt like, okay, I can do this, I'm going to be okay, 2008 hit. The biggest financial crisis to hit America in decades. And to say that I was financially unprepared is a gross understatement. It completely knocked me right off my feet. But instead of staying mad, because truth be told, I was sad and overwhelmed and everything else, but I was mostly angry. I was really, really angry. I mean, how could this happen to me? I did everything right. I followed all the rules. I was smart. I had a degree. I'm not a big spender. How in the world did I end up here? Worse still, the here I'm talking about is the one that I thought I had grown up out of and I thought I had left behind forever. The here that I'm talking about is lack and poverty and shame. So how could I go from living in luxury to barely making ends meet? From driving a luxury car to counting change to barely put gas in my beater of a car? To go from living in a 5,000 square foot dream home to now living in my parents' basement. But you know, like any good Latina, something shifts in our DNA when we get mad, and all of a sudden we just become resilient and resourceful and we get going and we're like, no, I am not staying here. There is no way I'm getting stuck here. And that was me. I got mad and I fought like hell to get out of there. Because I may have been broke at the time, but I was not poor. I was not poor in spirit and I was not poor in my mindset. I decided right then and there that, you know what, there's got to be a way for me to prepare financially and look forward from the conditions that we're living in right now. You know what I mean? I had to be prepared for the next time that life lifed me, because life always does. Look at the pandemic and everything else, right? That's happening. I mean, I was already an accountant, but I realized that there were obviously some steps that I didn't know. So I decided to go back to school and I took more accounting classes and more financial classes, running the tax business during the day and going to school at night with a 2-year-old. And I did that for almost 2 years. With a new degree and almost $40,000 in student loans later, I confirmed what I already knew, which is that a formal education does not prepare you for real life. And it doesn't teach you any real life skills. They teach you how to get a job, but they don't teach you how money works. They don't teach you how to manage it, how to multiply it, because if they had, I wouldn't be in this position in the first place. So then I said, okay, let me go the mainstream route. I started going to seminars near and far. I watched videos, read books, took every course that I could find, and every guru. I got mentored by some of the best people in the business. It was very intense. It was very expensive, but you know what it also was? Worth it. After almost 10 years on this journey, I learned how to make money work for me instead of me working for it. And I didn't care that no one ever talked to me about finances or considered that I needed to know this stuff for my future. Future? Like what future? Being a person of color is one thing. Being a poor person of color is another. Being a woman and a poor person of color is the trifecta. It's the perfect formula for becoming invisible and literally being left to fend for yourself. So I had no choice. I had to figure it out so I could save myself from drowning. I had to work hard and learn whatever it was that I needed to learn so that I could help myself and then my children, so that one day they can help their children. Because I decided that the cycle of lack ends with my generation. It ends with me. So that's my story, right? And that's why I don't just teach finance for a living, but rather it's a passion project. And I could choose to be greedy with this information and use it to only help myself, because after all, no one did it for me. But truthfully, I have to share it because no one, and I mean no one, is looking out for people like you and me. So if we don't help each other, then who will? So it's my mission to be my sister's keeper and to do whatever it is that I can to build and empower and teach women whatever it is they need to know when it comes to finance, whether it's tax strategies or how to get out of debt in 10 years or less, including your mortgage and student loans. Yes, I could do that. Or how to start a business so that you're not winging it and making all of these tax mistakes. If you structure it correctly from the beginning, you can avoid major tax bills. So that's just some of the stuff that I do. And again, it'd be my pleasure to help and serve and teach in any way that I can.
I got chills when you were telling your story. So powerful. I mean, there's no other way to put it. And I love how you truly turned your mess into your message, and how truly, I mean, you belong here, my dear. You belong in this community because you truly are. That's what our community consists of, is women like yourself who have just been through the ringer. Like their world just shattered around them, but here you are, stronger than ever. and you know, and I believe had you not gone through that very difficult life experience, you wouldn't be the person you are today. So
Absolutely.
you know, I mean, all of these hurdles and these major setbacks and adversities, they are just meant to make us so much stronger and to fulfill, you know, God's ultimate purpose for us, which is to help and elevate, you know, the lives of other people. And so thank God for you, my dear, and thank goodness for us connecting. And I'm just so blessed to for that networking event. So thank you to Women of Aurora for organizing that
thank
event.
You, Cindy.
So thank you, Cindy girl, for connecting us. So let's get into it, my dear. You know, like let's really get, because I know me and you had a brief conversation, and you know, in your opinion, and guys, you know, if you're watching, you know, please ask questions in the comments, because you know, we would love to address some questions that you guys have. And of course, you know, if you're watching on the replay, hashtag replay. If you're live, you know, definitely engage with us, connect with us,
for sure.
Ask questions. So you know, I obviously have my own set of questions that I'll start with. You know, what are just some common questions that you get, you know, from business owners and, you know, people that work a 9-to-5, you know, alike when it comes to taxes? And I know there was some recent changes in some of the tax laws and whatnot. So, you know, in your experience, like what are some things that people miss or they don't quite understand, like some common questions that you get?
So one of the biggest ones that have been coming up in the last few years is exactly what you just mentioned, is the 2018 tax law completely changed. I mean, tax law always changes a little bit. They vote every November on the new things or whatever, and we always get some changes going into the new season. But 2018 tax season, so calendar year 2019, for 2018 tax season, we noticed a major revamp in what people were getting back as refunds. Their refunds went down to next to nothing. And a lot of people ended up owing that year and have no idea what happened. And so what happened was, I don't know if you guys remember, but at Christmas, our president at the time was Donald Trump, and he went on and said, everybody's going to get a major Christmas present from me. You're going to get a raise in your paychecks thanks to me, and all of that stuff. And that was true. Beginning in January 2018, they changed the way they withhold money from your paycheck. You didn't do anything. You didn't ask for it. They just did it on your behalf to help you. So what happened? They started withholding less money from everyone's paycheck, which, you know, great. I'm getting a bigger paycheck, but we're talking about bigger paycheck. It was only 30, 40 bucks a paycheck, maybe 50 bucks a paycheck. So it wasn't anything that people were like, wow, you know, super excited about. But if you do the math, you know, $50 per paycheck times 52 paychecks or 26 paychecks is a lot of money. So what does it translate into? If they didn't take it out of your check up front, then you don't get it back at the end. Or you may end up short and end up owing. So if you did notice a drastic difference in your refund, or if you suddenly ended up owing when you never owed before, you probably want to look at your withholding, your W-4 form at your job, and you can very simply just tell them that you want to adjust it. If you want more money taken out of your paycheck, you can tell them to take out 10, 20, 30, 40 bucks per paycheck, and they will. And what that'll do is it'll go into holding so that you don't end up owing at the end of the year, or at least you get a little bit better refund. Now, you are getting back your own money. I want to be clear about that. It's not like you're getting money from the government, but some people like that. They like that for savings, so that at the end of the year, they end up with a couple $1,000s. That's their vacation money. That's their little cushion, whichever way. And they wouldn't save it otherwise, is my point. It's not like they're going to chuck away $50 in a drawer every week. So if you notice that happen to you, you can fix it. On my website, we do have a W-4 paycheck withholding calculator. You can go in there and play around with it for free and just see what would happen if you made little subtle changes to your paycheck and see if that would make a difference at the end of the year.
Got it. Now, how about business owners, Martha? Because I know the group consists of, you know, women that work, you know, a job, women that are entrepreneurs, or both, you know. So how do these laws, you know, affect business owners too?
So there was a law that was changed for business owners that actually, for once, was in our favor. Okay, so if you're self-employed, whether you do a Schedule C, sole proprietor, or if you're an LLC, or if you're an S Corp, if you're any of those things, What happened is they gave us a deduction that wasn't there before. And so let's just say somebody brought in $100,000 in income, right? You bring in the income, of course, you could do all of your expenses, and then that leaves you with your net profit. The new thing that started in 2018 is that they allowed us to take an additional 20% credit, if you will, off of the net profit, so that you would pay 20% less taxes on that money. So if you're self-employed, sole proprietor, Schedule C, 1099, LLC, any of those things, you pay not only income tax, but you also pay self-employment tax. And so there's a double taxation going on there. And that's why a lot of times our tax bills are so high as self-employed people. So that little deduction or credit really did help. It's not a lot, but it's better than nothing. But I do have a lot of strategies for people who are making six figures or above, and their net is 30, 40,000 and above. And if you're getting killed in self-employment tax, I have a lot of strategies for how to minimize or eliminate that by reincorporating things and doing them in the right way.
Good to know. So what would be like some best practices, I guess you could say, because, well, what is the ultimate goal, I guess, for tax season? Is it to not owe, or is it to get like a big refund? You know, like what kind of goal do people usually aim to have, or what's a good outcome when it comes to tax time, in your opinion?
Yeah, so if you're an employee and you get a W-2, most of the time their goal is to get a big refund.
Right.
But once you're making over six figures, honestly, if you're not owing, even if you don't get a big refund, you're winning, because that's a lot, right? You don't get earned income credit anymore. You don't get all of these other things. You still get child tax credit, but you don't get the earned income credit. So not owing is really, really a win. For us self-employed folks, it's a double-edged sword. Because if you do your deductions correctly, then you'll have a very low or non-existent tax bill, which is awesome when it comes to taxes. However, if you go to apply for a loan, if you go to get a car or a building or a house, guess what? You can't prove that you make any income, and now you've cut your own throat. So there's that nice balance of being able to strategize into, how do I show income, not get killed in taxes, and still qualify for loans or homes? So there are ways to do that. That would be an hour-long answer, but there are ways to do that. And it just takes a few tweaks and a few strategies that we can implement to make sure that happens.
Right. Because you're absolutely right. I mean, if you show a certain number of expenses, but then you show little to no income, I mean, and isn't it like the IRS considers your business a hobby if you don't show any income after a few
if you
years?
don't show any profit after 3 out of 5 years, they consider you to be a hobby. And honestly, who would do that, right? Who would be in business if they never ever made a profit? So you have to be strategic with that. And there are years, especially at the beginning, when you genuinely do have a ton of expenses, and as long as you have receipts, it's legitimate, you can absolutely put that in there. But it doesn't make sense in real life, and it certainly doesn't make sense to the IRS that somebody would run a business and forever and always not make a profit. So you're asking to be audited. You're asking for them to dig and be like, okay, wait a minute. So, and then to answer that other question of, well, I want to buy a house next year, so let me go ahead and show income now, when I haven't showed income for 3 to 5 years. So suddenly, magically, I make $60,000 a year in profit, and the IRS is like, oh, there you are. I knew you were making money. And the biggest mistake, again, people make is they show income too quickly and can't justify the growth, or they drop their income too quickly and can't justify the reasons why. So everything needs to be justifiable, and it needs to make sense, and there needs to be a consistent flow of things so that you don't have these peaks and valleys. Because then again, they will audit you, and then they're digging through all of this stuff. You don't want them to do that.
Right. So, wow. That
yeah.
My friend Maria said it's like finance is a foreign language. It's true. Absolutely.
Yeah.
Absolutely.
So again, I'm one that I will talk to you just with regular words. I'll make analogies with regular stuff that everybody can understand. Being a woman in finance, I shared this with you at the event. we literally get trained to only talk to people who are multi-six-figure earners, preferably married, and their spouse makes six figures, at least $500,000 in investment income. And, you know, they want all this criteria. And I'm like, those are not the people that need help. Like, people like us are the ones that need the help and the strategies. They've got that on lock with all of their fathers, grandfathers, fathers, advisors, you know what I mean? But who helps people like us? Who talks to people like us? I don't know about you, but for me and my family, I'm the first woman in my family to break six figures being self-employed. So who do I go? Thank you. But who do I go to for advice? Who do I go to and say, hey, now what do I do? Now that I'm making this money, help me, not just because the name of the game isn't just making money. The name of the game is keeping most of your money.
Right.
And growing it or perpetuating it, helping it work for you, like I said in my introduction.
Right.
But if we don't have anybody to go to and we don't have anybody to ask and anybody who will understand us and not talk down to us or make us feel stupid because we don't know the terms or whatever, you know, so I do it the way I wish somebody would have done it for me. So those are the conversations I have.
Absolutely. And that's what I love so much, because you are literally the first person who breaks it down. Even when you and I were talking, I've never heard someone talk like you in my years of filing taxes about, you know, simply just educating in simple language. And it's literally just file get your tax return and that's it. You just give them your papers, they do the work, and out the door you go. There is no
explanation of anything.
There's no explanation. Exactly. Yeah. So whether you hate it or love it, hey, that's what you get. Like, that's kind of the mindset around.
But if you understand it, you'll be able to make better decisions. You won't be able to control it, but at least you'll be able to navigate it better because you understand, oh, that's what that line means.
Right.
Oh, that's what head of household is. I never understood. What's a standard deduction?
Right.
You know, what is that? How does that even apply to me? And how come if I work with my best friend and we both work at the same place and we earn the same salary, how come she gets a bigger refund than I do? I don't understand that. You know,
now,
all of that.
Martha, what's your opinion of like people that do their own taxes, like the TurboTax, or some people have that, I think, H&R Block, like software at homes, like, you know, do you think that's a good idea? Or like, I don't know. I was never too sure about those softwares.
It's not a terrible idea if you have a very simple return. If it's just W-2s and maybe just mortgage interest and that's pretty much it, then you're probably okay. The thing that upsets me is that they advertise it as free and it is not free. It is not free. It's free to put your data in there, but once you go to file it, there's a fee. Once you go to print it, there's a fee. Direct deposit, all these other things they're charging you. So why not go to someone who can actually do it with you and then explain it to you? And it's not much more than what they charge for the quote unquote free version.
Exactly.
And then you can get the strategy and the advice that you need that you're not necessarily going to get via a computer. The other thing about those programs is if you don't know to ask for a certain credit, it doesn't tell you to. So I've had a lot of people go and file their taxes and they think they're good to go. And then when I review them, I'm like, wait a minute, you missed this credit and this credit and that credit. Oh, well, it didn't give me an error. Well, it's not wrong. There's no error that you didn't ask for that, but you need to know where to go and where to click and what to do to make sure that you get those credits.
Wow. That's
so you've got kids.
Yes.
Yeah, you should probably have somebody do it for you or with you. So you're not missing out on things because there's a lot of little nuances.
Exactly.
When it comes to that.
Hey, Cindy. Cindy's on. Hello, beautiful. We were talking about you a little bit ago. Like, thank you, Cindy, for this amazing connection. I'm literally taking so many notes, you guys. Like, take this all in, y'all. So, okay, I have like so many questions. So, Martha, what do you think about like? A lot of people will say that those that have a W-2 should also consider having a 1099, like have both, you know? So what's your opinion on that? Like, does that help you save more money? Like, you know, what are the advantages of a 1099?
It depends. It depends. Because remember, like I said, with the 1099, not only do you pay income taxes on your net profit, but you also pay self-employment taxes in addition to that. Okay, so to break it down in easy terms, If you have a W-2, let's say with 50,000 on it, then you've got a side hustle, right? And you made another 10, then your income tax would be on the whole 60, right? So if you had 10,000 in profit, now that's after your expenses and your mileage and everything else. If you ended up with 10 in profit, you would pay, that would get added to the W-2. So now we've got the 50,000 from the job plus the 10,000 in profit from the side hustle. They're taxing you on 60,000, not just the 50 or not just the 10 independently. Okay, so they tax you on that, and then on the 10 profit, you've got another $1,500 in self-employment tax. Self-employment tax is 15.43%. So for easy math, 15%. Mm-hmm. So out of every 1,000 that you end up in profit, you're going to pay an additional, right, $150 in just the self-employment tax on top of the income tax. So where some people will tell you that it helps you is if you're going to do nothing but show losses. Because in that same example, if you had a $50,000 job and a $5,000 or $10,000 loss on your side hustle, now they minus that away from your W-2. And now instead of paying income taxes on 50, you're paying income taxes on, say, 40. And then there's no self-employment tax because you had a loss.
Right.
So that's where it can help you. But honestly, with a 1099, again, it's very difficult for the IRS to let you get away with that too long, because they're going to be like, no, that doesn't make any sense. Exactly. That's easier to accomplish with a rental property. We had a rental property that's very easy to end up with losses on a rental, legitimate losses on a rental. And now, not only do you get to minus that away from your W-2 income, but rentals are not self-employment, so there's no self-employment tax.
All right.
So if you're going to get into a side hustle, maybe the side hustle should be getting a building, 2, 3, 4 unit building, and taking in rents, writing off all those expenses, right? You write off the mortgage, you write off the property taxes, all the repairs, utility bills, anything. I don't care if you buy a garbage sticker for that property, that's a write-off. Everything's a write-off. Where in your personal home, you could put gold floors down and marble walls and it's zero write-off. Okay.
Wow. Wow. That is Cindy is saying, Martha, we need to talk.
Yes. And here, I'll give you another freebie. Okay. Yes. Since I've already had my coffee and I've got my fuel in place. Yes. Because of the pandemic, because of the moratorium, because of the forbearances and all of the stuff that they're doing to help us, unfortunately, that's going to end at some point, right? Pandemic's going to be over, the numbers are going to drop to where the government's going to be like, hey, no more moratoriums. Hey, no more incentives, no more help. So all of the folks that have not been paying their rent all of this time, or have not been paying their mortgages all of this time, unfortunately, not all of them are going to be able to save those properties. This is what happened in 2008 when I said it smacked me in the face. We had everything in real estate, and when the market tanked, we lost everything, and I mean everything. So unfortunately, this is going to happen again. This is going to happen again. So why do I say we can use that as a strategy? If you have credit available, any kind of money to put down, if you don't own a home now, don't buy one, wait a year, because there's going to be a ton, and I mean a ton of foreclosures available. So that would be the ideal time for you to buy a property when they're at their lowest value. Try to get into a 2-unit, 3-unit, 4-unit, and then rent it out. Once you've lived in your rental for 6 months, you could say, you know what, I don't really like living with my tenants. I'm going to go buy myself a single family property now. So you've bought the 4-unit with a minimum down payment, which is usually 3% plus closing costs. If you're strategic, you can get the seller to pay your closing costs for you. So just 3% down. You live in the investment property for 6 months. You can then move out, keep the rental with the passive income coming in, buy yourself your single family residence with what? 3% down again. And now you've got that rental coming in, and now you've got that beautiful single family residence for yourself at that lower level, because again, the prices in homes are going to plummet in the next year.
Wow. I am so glad. I'm so glad you brought that up because Cindy, me too, girl. We have a girl, Martha, we need to talk too. Because we also have a rental property, and with the way the real estate market is right now, I'm like, holy cow, like houses are just flying off the shelves. People are paying over asking price, and I've seen both. I've seen some realtors say, oh no, there's no bubble, this is how it is now.
It's just common sense.
And I've seen people like yourself, like, and that's
Yeah.
where I was at. Like, there's gotta be a foreclosure or something coming up soon.
I mean, history repeats itself. How can they say they're not a bubble when it's literally repeating exactly what happened in 2007 and 2008?
Right.
What happened in 2007 and 8 was not because of a pandemic, but it was because of inflated home prices, number one. Number two, they were giving what they called 80-20 loans, piggyback loans. So you could buy a property with zero money down and zero closing costs because they would give you an 80% loan and then another 20% with it at the same time. And people were buying homes that they literally could not afford in real life, but they qualified on paper. So they're buying up these properties, overspending, and then over borrowing. And that's why there were so many foreclosures in 2008.
Right.
And again, this is happening again, not for the same reason, but it's happening. It's going to happen again.
Right. And that's what and that was the reason why some people were saying, oh, this is not going to happen, is because the regulations are a lot stricter now on how to qualify for a loan.
On lending. Yeah, but not on pandemics.
Exactly. So I'm so glad you brought that up. So ladies, if any of you, especially if you're real estate investors, or if you want to buy a building, you're thinking about it, even if you want to buy a building for your business, get in touch with Martha. Oh my gosh.
Yeah. Here's the other thing too. If you own a home, whether it's your where you live, your primary residence, or whether it's an investment property, right now the values are way high, higher than they should be. So if you have any kind of equity in there, right? If your home is suddenly worth 200,000 and you owe 100, you're like, woohoo, I've got $100,000 in equity in there. That's awesome. Well, by next year, you're not going to have that same 100,000 because the values are going to drop. When there's foreclosures all around you, what does that do to your value? It drops your value. So if you have credit and you have the means to do it, my advice would be refinance right now. The rates are super low. Get your equity, take it out. And you're like, well, I don't need it. Well, would you rather have $80,000 in the bank that you don't need? Or watch your value go from 200,000 down to 140, and you could have had the money, but you didn't take it out. So if you're able to do a refinance right now and do a cash out refi and get at that cash, especially on your investment properties. Your investment property should always be maxed out on credit. Why? Because we want those negative numbers in our tax returns. It does you no good to have a paid off investment property that you now don't have any expenses against. It's a business. Businesses should always have expenses. If you want to cash refi out your investment property and pay off your single family, by all means. There's no write-offs with the single family anyway. They've done away with 99% of all the write-offs for our personal homes, but not for investments. So there's a lot of strategy there as well.
Mm-hmm. Wow, I am blown away. So you, me, and my husband will schedule a meeting.
Absolutely, my pleasure.
And ladies, Martha is available on Zoom. If you're not local, we're in the Chicagoland area. If you're not local to us, still, book a Zoom call with her, just like this.
I work with people all over the country. So I have clients all over.
Absolutely, because this is golden information. And obviously, not just for business owners, but also if you have a job and you just want to maximize your tax strategy, figure out, what else can you do? Yep. Because how often would you say, Martha, how often should people visit their tax strategy? How often should they, is it yearly or
honestly, if there's no life changes in your life, I mean, if you're just same job, same everything and nothing ever changes, there's not a whole lot there. But if you've got life events happening to you, you've got children, we had a baby, now what? Or my kid is now, here's the one that I get all the time. My kid's about to be 16 and they're about to get a job. Is it true that I can no longer claim them on my taxes? No, it is not true. Your dependent is your dependent, whether they work or not. They can earn all the way up to the standard deduction, which is $12,400, and still be your dependent. They could even earn up to $18,000 or $20,000 and still be your dependent. Why? Because with the money that they make, they cannot possibly fend for themselves. They can't get an apartment on that income. They can't buy groceries. They can't live on their own and be an independent taxpayer. So what happens is the child stays on your tax return and is your dependent. And yes, they still file their own tax return and get their own refund, but they have to specify someone claims me, and then they get treated differently. But it doesn't affect the refund at all. They still get the same amount, and then you get the benefit of having a dependent on your return. And that's especially key if you have a college student, because you get the opportunity credit, tuition credits. There's all kinds of stuff. You could get anywhere from $1,000 to $2,500 for your college students that no, they would not get, because the credits are based as a percentage of the total income. So if you've got a college student that works part-time somewhere or whatever, and they're making, I don't know, $12,000, $15,000 a year, they're not going to get the same amount of credits as the parents would, because the percentages aren't there.
Right.
So lots of stuff going on with that as well. Yeah.
Cindy says, I love these talks. How can we put this conversation on Woman of Aurora? Girl, yes. Oh my gosh.
Book me on my website.
Absolutely, Cindy. Yeah. I mean, hey, I can share this in your group, or if you want to bring on, Martha in your group on a live, girl, sure. you just let me know. You just let me know.
And speaking of college students.
Yes.
So this year was a record year of all of a sudden, all of these college students wanted to do their own tax return so they could get what? Stimulus money, right?
I was just going to ask you that. Yes. We're talking about stimulus checks, y'all. So yes, listen in. Yes.
Listen up. Yep. So with the stimulus checks, unfortunately, kids, no, the IRS isn't dumb. They're not going to let you file your own tax return on $5,000 and say, I'm an independent taxpayer. I don't depend on anyone. Give me my stimulus money. That's not what it's for, unfortunately. Right. Now, if they did work, substantially, I would say what substantially, I would say, at least over 20, and lived on campus, not at your house, or had their own place or whatever, then that's totally different. But as we all know, there's a lot of college students that still live at home or come home on breaks and depend on mom and dad for pretty much everything. So the stimulus money, third round only, because the first two didn't include kids over 17. But that third round $1,400 check does belong to the parents, not to the student.
Okay. Now, Martha, how about people that don't file taxes? Like, are they, because I know like some elder people got the check, some didn't, like, because I'm not sure how that correlates with Social Security disability, or I don't know, like, what was the difference between some people getting it and some not getting it?
So what happened is when they did the first round a year ago, April, unfortunately, it happened way too fast because there was so much pressure to get the money out there. So the IRS didn't have enough time to fine tune the system. How it was supposed to happen is they were going to go off of whoever filed taxes in 2018 automatically got it calculated off of that. And then for senior citizens or people on disability, they were going to go off of their Social Security. As long as they were getting money from Social Security, whether direct deposited or mailed to their house, they were in the database to receive the money, and they should have gotten that automatically. A lot of seniors did not. A lot of people on disability did not. There was a glitch in the system. I don't know what happened. So they created a special website for you to go in and ask for it. Unfortunately, 99% of people didn't know, or because they're older, they're not tech savvy, so they missed that window. So not only did they not get the first, they didn't get the second, and of course they haven't gotten the third. So there is a way for me to file a special tax return just for the stimulus. So if you know anybody who hasn't gotten the first, the second, right now that's what we're dealing with. The third, it will be for 2021 taxes. But if you didn't get your first one or your second one or both, there is a special form that we fill out. Even if you have no income, it doesn't matter. You could literally be homeless, have no income whatsoever. As long as you have a Social Security number, as long as you live in the US, and some way, somehow, somewhere to receive a paper check or direct deposit, you do qualify for the stimulus check. So once they give you the first and second round, which would be in the 2020 taxes, so that's $1,800 per person, then you automatically get put in a database to get the $1,400, and they've been getting them between 6 to 8 weeks after the $1,800. So
got it.
there are ways to do that. So if you know anybody that doesn't work and they think they don't qualify, that's not true. They qualify for themselves and their children. So we just need to file quick little stimulus only return and get them their money. Yep.
Wow, this is
or
huge.
if they didn't get it all. There's people that haven't gotten it all. There's people that only got a portion.
Yeah.
So this would be the time in your 2020 taxes to say, hey, I didn't get it all. And then they give you what's called a recovery credit, and you do get it back. And I'm just going to warn you, not that anybody here is going to do this, but there's a lot of people who are saying, I never got my stimulus check, me or my kids or whatever, and trying to get all this money from the IRS. So what's happening is all of those tax returns that are flagged for the recovery credit are being set to the side, and they're double, triple, quadruple checking these to make sure there's no fraud. And there's going to be major consequences for people who have tried to commit fraud. So
right. So don't be, don't be shady. Oh man,
don't be that guy.
Yeah. Cindy says my grandma needs this. Girl, yes, absolutely. So
I can help her. Absolutely.
Yeah, anybody in the group, if you have family members who didn't get them, reach out to Martha. Now I know, Martha, some people I think didn't get it because of their income, right? Like if you made over a certain income amount, you didn't tax.
Correct. Yeah. Okay. So some people made too much money in 2018, and and they didn't qualify for it. So then when we go off of 2019, suddenly they qualify. Right. So then they would get that rebate back. There's other people who made too little income because of COVID or whatever. And so they're allowing people to use the previous year's income so that they can now qualify for earned income credit or these other credits that they otherwise wouldn't qualify for because they didn't make enough. Another major situation that happened is, let's say you were on unemployment most of the year in 2020. So your income was very low, which means that your earned income credit, there's nothing to qualify off of because your earned income is what they go off of. So unemployment's not earned income. We could use 2019's numbers and get you that earned income credit. There's just a special form that we got to fill out to say, hey, let's do a look back and let's use my 19 income so that I can get those credits for me and my kids. Right.
Perfect. This is awesome.
And then did you guys all know about unemployment? Did you know that the unemployment is tax-free up to $10,200?
Oh, well.
Yeah, so for anybody who was on unemployment, for anyone who was on unemployment, they were going back and forth. Should we forgive it all? Should we forgive some? Should we forgive none? They finally settled on $10,200 per person. So if you're married and both you and your husband got unemployment, the first $10,200 for each of you is tax-free. So it's just as if you never received it. And if they withheld money for your taxes in anticipation of your tax bill, you get all that right back. So
wow,
very crucial to know that as well.
Golden nuggets. Now, guys, if you have questions, throw them in the comments because I'm just going to keep asking mine. Like, I love this. This is awesome. And I know we're coming close to time. So, Martha, I want to ask one last question about, people that do investments, whether it be, the 401k or, if you invest in, any kind of like stocks or whatnot. Because I know like the two things are certain in life, death and taxes. So, people that are like serial investors, or even people like in the space, Bitcoin and stuff like that, like, what would be some smart like tax strategies when it comes to, simple investments like a 401k that you get with your employer, or, people that are like heavy duty investors and that really play in the market? Like, what would be like kind of your suggestions for kind of both, like both communities of people with tax?
So basically you need to just understand the taxes behind all of that. There are things that are taxed immediately as they grow. There are things that are taxed later. So those are your deferred accounts. And then there's stuff that's tax advantaged. So you need to know the difference between each one, so that you can make the best decision for you and your family. So let me see if I can share my screen and do a whiteboard real quick presentation for you guys.
Ooh,
you can
nice.
see
Yes.
how this all plays out, because it's very, very crucial. Do you guys, can you see that?
Yeah.
So I'm drawing with my mouse, so y'all need to be a little forgiving here with how this all turns out, okay? But basically there's stuff that's taxed now.
Right.
Okay. So that's going to be like your CDs, stocks.
Right.
Let's see if I could draw with my finger. I think this is stocks, bonds, mutual funds, money markets.
Yep.
You know, all of that stuff. Checking accounts don't grow, savings accounts don't grow, but they're in that same category. Dividends, right? So mutual funds, all of that stuff is in there. So what happens is when it grows, then you get a tax paper at the end of the year, 1099 INT for interest or DIV for dividends. And you have to pay taxes on that every year as it grows. So we all want our stocks to grow, but guess what? They're charging us taxes on growth that we may not have necessarily cashed out. Just because it grew, you're paying taxes. So then when it loses, you don't get breaks for that. So you just need to know that that's how that works. And then the later, that's going to be like your 401k, you know, 403bs, 529 plans, college planning, 457s, IRAs, annuities, because all of those numbers are just tax code. Okay. The 401k is just law number 401 of the giant textbook, right? Law number 401-K tells your employer how to tax you on the money that you're saving for retirement. It's all tax code. Okay, so how it works is, right, you're putting money in this account out of your check, right? So if you were going to make $1,000 and you want to invest in your 401k, you could say, take $200 out of my check and put it in my account for me. So now they're only taxing you on 800, not the whole 1,000, because it sounds like a hookup, right? But what happens is they're going to tax you later when you use it. So they don't tax you up front, but they tax you later. So now, okay, if they're investing it, it could go up with the stock market, right? But what else could it do? Could go down.
Down, right.
And you have no control, especially if you have it in aggressive accounts. It could go up a lot, but then you're going to take huge hits. And if you do moderate or fixed, then you're not getting a lot of growth, but you do have safety. Okay? So there's that. Now, the next thing is, because it's for retirement, the tax law says that you're not allowed to touch that money until you're at least 59 and a half. Okay, so you're not allowed to use it. Most people know this. What happens if you pull it out before 59 and a half? You get penalized. Okay, so you get a 10% penalty. So if you needed $10,000 out of your account, first of all, they're not going to give it to you at your job because you can't just grab it. You have to borrow it out, or you have to have an emergency in order for them to give it to you. But let's say they give you the $10,000. They're going to go ahead and take 1,000 of that and give it to the IRS for the penalty. And then what else are they going to do? Take out about 20% for taxes.
Yep.
So if you take out 10, because you need 10, you're really only going to get a check for 7. You're like, no, but I need 10. All right, well, then you got to take out over 14 to end up with 10. Okay, so does everybody follow me so far on that? Okay, so if you're like, all right, Marty, look, I go by Marty sometimes, so I call. I don't like this. I don't want to pay all this stuff. So I'm going to wait until I'm 60 years old, and then I'm going to use my money because I don't want to pay any of the stuff. So in that sense, if you were 60 or older, then the penalty would go away. But the taxes are going to be there for the rest of your life. Those never go away. So Sophia, what are the taxes going to be when you're 62 years old?
Oh God, I don't even want to know.
We have no idea, right? We have no idea. But do you think they're going to be lower, higher, or the same?
Oh, absolutely higher. Absolutely.
More than likely higher.
Much higher. Yeah.
So now if you say to me, look, I don't like any of this, so I'm just not going to touch it at all. My husband's making money. I've got my investment properties, right? I don't need this. So I'm just going to let it grow. Hopefully it'll do a lot of growing and not a lot of losing. And I'm just going to leave it alone for when I'm like super, super old or whatever. So here's another little rule that comes in. Now at 72 years old, you have to deal with RMD. What's RMD? It's required minimum distribution. So distribute, to take out of, required by the government, by the IRS, to take out the minimum every year. So what's the minimum? It changes every year. Tax law changes and the percentages change all the time. But the bottom line is that if you have, say, $100,000 in here and you haven't touched it, remember, they can't tax you until you pull it out. So the government at 72 years old sends you a letter with tiny little fine print that says you better start using that money or else we're going to penalize you, this time for being too old. So over here, you got penalized for being too young. Over here, you're being penalized for being too old.
Wow.
So if the penalty was 10% for being too young, what do you think it would be for being too old?
Oh, more.
How much more?
Oh, God. Double? I don't know.
You think? You really love our government. It's actually 50%.
What? 50%?
It's a 50% penalty for not using your money.
Wow.
Wrap your mind around that. For not using your money. It's a 50% penalty of what you should have taken out.
Wow.
And then guess what happens when you take it out? They tax you. So you're either going to get hit here or you're going to get hit here, but you're going to get hit. Right? So all that is going on with your 401k. And then I'll tell you just one last thing. This money in here is your money. But when you die, even if you have beneficiaries on your account, they don't get the whole thing. Your spouse gets the whole thing as a transfer to your spouse. But you know what? A lot of ladies, a lot of people in our day and age aren't getting married anymore.
Right.
There's a lot of single people who live together, but they're not married, whatever the case might be. But at some point when you pass away, whatever amount of money you have will not go 100% to your beneficiary unless it's your spouse. And if it is your spouse, they have to play by all of these rules. But if you want to leave it to your children or your grandchildren, whoever at that point, they have to pay capital gains tax on that money. And right now, if you're following the news, Biden is trying to raise the capital gains tax to almost 40%. So how does that make you feel that you worked all your life to save this little money in here, grew it, to 100,000, 500,000, whatever that number is, and that when you die, your children only get 60% of that money, and your Uncle Sam is your biggest beneficiary.
Right. What if your husband has passed away, Martha? What if your husband's passed? The same thing.
You inherit it, and you still have to follow all of these rules. You still have to, if you're younger than 60, then you get penalized if you take it out. So the penalties, the taxes, the RMD, all of that still comes into play. Everything is still there.
Wow.
Right? So the last one then is going to be our advantaged. So now if you say to your employer, look, rather than I'm getting my $1,000 paycheck, I don't like the 401k. I don't want to play that game. Right? So give me my whole $1,000 paycheck, tax me on it. And then once I have the money in my pocket, then I can go ahead and invest it wherever I want. And I'd have to deal with this deferred account tax later thing. What could we put it in that's tax advantaged? We could put it in Roths.
Yes.
Okay, so if your job offers you a Roth 401k, better than nothing, I would go ahead and take that instead of the traditional. Or there's accounts that I can help you structure that are Roth driven. And then there's another 7702 tax code in the very back of the book that says that if you save your money inside of a properly structured life insurance policy, cash value life insurance policy, this awesome tax code says your money from your paycheck goes into this bucket, right? But it is not a traditional retirement account. So we don't have to worry about any of the ups and downs of the stock market because it's not in the active stock market. It's an indexed account. And if you've heard about indexed accounts, they're the best ones. Another beautiful thing is there's no age restrictions. You can use the money no matter what age you are. Since there's no age restrictions, there's no penalty. Since you've already paid the taxes up front in your paycheck, there's no taxes at the end. And there's no RMD.
Oh,
and if that wasn't already awesome and off the charts ridiculously good, when you pass away, your children get all your cash tax free.
Yeah.
And a death benefit, because remember, we have to put this inside of a life insurance policy. So let's say the death benefit is another 100,000. They get all your cash and all the death benefit, and they pay no taxes whatsoever, no capital gains, no nothing. They're free to do with it whatever they want. And it's just knowing your tax codes and knowing what to do.
Oh my God.
Okay?
My mind is blown. Oh my goodness. Guys, seriously, this was gold.
You guys were in my advanced class. This is usually my advanced class strategies, but you guys look like you're savvy. So I'm like, let me drop some knowledge on you guys.
Absolutely. And I mean, obviously this was in a group structure, guys.
Yeah. One-on-one is clearly much more powerful because we could look at your numbers, how it would be for you and your family. And one last thing I'll address, because I always get the person that's like, well, my job matches. Okay, great. Awesome. So if your job matches, you say 3%, but you're getting penalized 10 and getting taxed 20. What are you really coming up? You're not. You're not. Your job incentivizes you to contribute to the 401k plan because as a corporate owner, they get incentives from the government to have people enrolled in these programs. Why? Because the government benefits. So the corporation gets a massive tax break because you contribute. They control the money, not you. If you don't believe me, call them tomorrow and say, I want to withdraw my money. They're going to be like, it's not yours. The company owns it. Until you leave, you get fired, you get, laid off, or your company gets bought out. You cannot access that money. It does not belong to you until you leave that job. So just something to be aware of. 401ks aren't bad necessarily. You just need to know what the rules of the game are so you could play your best game.
Absolutely. And Cindy, you didn't miss anything, Cindy. Martha was saying that the information she gave, it's for like her advanced class, but we seem like we're savvy peeps. So she laid it out for us. And I so appreciate that you did, because this is such golden nuggets right here, you guys. Y'all, you need to take notes and take down Martha's info. I'm going to share her link in the comments and I'm going to put it in the description. Just go straight to her business page. All her information is right there. You can call, email, go to her website, book a call, definitely book a consult. Just so because her situation might be a little bit unique, different. This was a group setting. So, or if you don't feel comfortable, commenting in the live, just reach out to her personally. She's also on Facebook. You can, is it okay if they send you a DM? Yeah, so you can even just send her a quick DM and, you guys can connect. So she is lovely. I am so blessed to have her in my life now because I needed a good tax strategist because, you just don't get the right information. And
you don't know what you don't know.
And
right. And I tell that story all the time. There's stuff that you know, and you know that you know it. Like I know how to cook, right? And there's stuff that you don't know. And you know that you don't know it. Like I can't do brain surgery. I can't fly a plane. But there's stuff that you don't know that you don't know that you don't know until somebody points it out to you or says, hey, did you know about this? And you're like, I didn't know that. And I didn't know that I didn't know that. Right?
Absolutely. Absolutely. And even for me, it's even like having a third party person such as Martha, because I swear I'm always trying to get my husband to think about these things, but he don't take me seriously. So sometimes it takes from,
you can't be a prophet in your own land. You already know that.
Exactly. So sometimes it takes a person like Martha to talk to her significant other to get on board, man. You got to get on board, guys. Taxes will kill you unless, like Martha said, you know how to play the game right. These big players, they're playing the game. That's and right. The rest of us need to catch on. And And that's the whole point of this group. Educate yourselves, use the resources and the tools, so then you can pass it on to other people and you can fulfill your purpose up to its maximum potential. Because if you're not winning, your family's not winning, your community's not winning, guys, it's a huge disservice to everyone. So this is why Martha's here. She's in the group. Reach out to her. I'll post her links, and I'm just so thankful that we got.
For the ladies that have kids, real quick, I'll just touch upon the tax credit. I know a lot of people are hearing things are changing in the child tax credit for 2021. So yes, the child tax credit is usually $2,000 per child up to age 16. The minute they turn 17, it drops to $500. Okay, so they've changed that for 2021. Now it's going to be $3,000 per child. And if you have a 6-year-old or younger, it's going to be $3,600 per child. Okay. Wow. So that's going to be a nice little boost in everybody's tax return next year. Now, they are going to give you a choice, I believe, at your jobs, that you could get an advance on that credit starting in July. So you could get up to $250 per child advance to you beginning in July. If you don't need the money, I would say leave it alone and wait and get it all complete in your tax return next year. That advance is really, truly, it was implemented for people who are very, very low income, who need the money right now. Maybe they have 4 or 5 kids. That's a lot of money. They could use that $1,000 or that $1,250 to pay rent or buy groceries or survive this pandemic. So that's why they did that. But if you really don't need it, don't take it, because remember, it's just an advance on the credit. It's not extra money. It's not free money. They're just advancing it to you. So if you don't want it or need it right now, just let it accumulate and let them give it to you next year.
Wow. Yes, yes, yes. Cindy goes, what? Girl, my mind is, woo, this is exactly what I needed. Because, man, I've been trying to sharpen up my own skills and just learn as much as I can, soak it all up when it comes to finances and wealth building, because that is not, my background. So, and I went to MBA school, but they don't teach
you this stuff.
They don't teach it, you guys. And so, thankfully, the people in this community are here to help you. Cindy says, give me all that knowledge. Hell yeah. I am on board too. So, So Martha, you're going to be hearing from me for sure. Awesome. We need to talk, girl. And guys, take advantage of this. Yeah. Oh my goodness.
And for any of you who are affiliated with groups or churches or whatever, where there are women who only speak Spanish or prefer to hear this stuff in Spanish, I am fluent. I was born in Mexico, so I don't speak that gringo Spanish. I speak el español perfecto. So please take advantage, because again, these are, my heart is for those of us who don't get talked to, the ones that get skipped over, the ones that don't get treated like we deserve this knowledge. And as women, we're the ones who take care of our homes. We're the ones who are like, if you teach a woman, you teach an entire generation, you teach an entire household, you teach an entire neighborhood, an entire community, because we share. Most of us, we all know a few that, but most of us will share information with each other, our sisters, our cousins, our neighbors, our coworkers, and so that's why I love to teach women, because I know if I teach one of you, I'm teaching 100 of you. So English, Spanish, Spanglish, however you guys want to do it, it'd be my pleasure to help.
Oh, thank you. Thank you so much, Martha. That is such, because your time is so valuable, and for you to be so generous with your time, I mean, I definitely don't take that for granted. And guys, invite people to this group that will benefit from this live as well. So please invite them here, tag them in the comments, for whoever that will benefit, regardless of, whatever, because we share it a lot. So, so definitely, invite people and reach out to Martha if you want her to come and speak at one of your events, or, at one of your local community centers and whatnot.
I do workshops as well. So if somebody wants a workshop, like, hey, can you come to a workshop and show us how to get out of debt in 10 years or less? Can you come to a tax workshop and just show us how to even read and understand a tax return? Can you do a workshop and show us how do we go from side hustle to an actual, should I incorporate? Should I be an LLC? What's an S Corp? How does that all work? I do workshops around all of that stuff.
Love it. Cindy, I owe you, girl. I owe you lunch for connecting me with Martha. So So thank you so much. And guys, thank you so much for tuning in. I know there's so much else that we can talk about, but I know like y'all are probably it's been a long night, and I know people have things that they need to tend to, but just reach out, book your one-on-one, and just share this information, people. This was invaluable to me. My notebook is filled. So thank you so much, Martha, for just sharing your time, sharing yourself and your energy and your story. It was just, I seriously got goosebumps when you were talking. And, you're just such a blessing to our community. So love you.
Love you. Thank you, everybody.
Thank you so much, guys, for tuning in. We'll see y'all soon. Bye-bye.
Bye.